heard of you got term and whole life. Like, what are the different types? Okay, you kind of just break that because I don't know how many they got or like what they
Okay,
do or what they cover. So you gonna break that down?
that's a good question. So before I get into the difference between those, I will say that if you do have life insurance at your job, those are going to be term insurances, right? So with those, if you get fired, if you quit, you get laid off, that policy is not going to follow you. So what I always tell people is it's always smart to get your own personal life insurance, because especially if you're somebody that works for a job for so long, people do get laid off 20, 25 years in, and you don't want to wait that long, to get a personal policy, because you'll be older, you might have health conditions or whatever. But the difference is, so basically in the life insurance industry, you have term insurance and then you have permanent insurance. So permanent insurance would include whole life, which is going to be most popular. You got universal life, index universal life, variable life.
Oh damn.
Yeah, you got 15 pay whole life, 20 pay whole life. But speaking of, because I mean, most of those are they're gonna have most of the same similarities, some differences. But so when it comes to term insurance, like I said, it's most popular. It's also going to be the most affordable kind of policy to get. So that kind of policy allows you to get more coverage at a cheaper cost, compared to getting a permanent policy. And like I said, term insurance does come with those living benefits that I said earlier. Depending on what life insurance company you go with, you can also convert a term life insurance policy into a whole life or another permanent policy as well. And then also depending on company, some of the terms may come with guaranteed renewability, meaning that, let's say you're 25 years old, you get a 10-year term, it'll be the same price till you turn 35, and it'll automatically renew if you wanted to.
Okay.
So you don't have to, go through the process, fill out any more paperwork, but the price will increase because now instead of rating you at 25, they're rating you at age 35. So, and that counts if you get a 10-year, 15, 20, 25, 30-year term, because they come in those terms. You might even also find some companies that might offer 35 and 40-year terms, although it's rare. But I like selling term insurance. Well, I like selling all kinds of insurance. But yeah, that's pretty much it on the terms. Um, Now permanent policies, I don't want to get into like every single like one of those I just named, because
Yeah.
I could go on all day. But with permanent insurance, basically you're locking your premium in to where it never's going to increase. As long as you pay the premium on that policy, it'll last you your lifetime. Now those permanent policies will come with the same living bit. I'm sorry, same living benefit that I talked about before, as far as like the medical conditions. But permanent policies also come with something called cash value. So basically, as you're paying your premiums every month, some of that money is being put into it's an account that's tied to your life insurance, but it's something that'll earn interest annually. Now, sometimes that interest can be ran off of like a insurance company decision. So they can give you 4%, 5%, or whatever. And then some other permanent insurance will allow you to tie your interest rate to a market index like the Nasdaq, S&P 500, the Russell 2000, and then you could get a yeah, 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 and then you could get like an interest return, off of that.